But once you get into the real world, when things get out to the tail end of crazy and nutty and difficult, right? Things never play out like they did in the stress test. And so, before 2008, banks passed similar tests. That was the thing you were pointing out, right? Well, so banks passed the hypothetical test in 2008, but when the real test came, it crumbled. Banks went under. You had Lehman going under. You had Bear Stearns collapsing and being bought for, I think it was $2 a share, and a bunch of the banks got bailed out. Morgan Stanley and Goldman Sachs had to switch to a banking charter, and so with different capital requirements, like the whole thing was a giant disaster. So basically, the headline was all banks passed the stress test. I would reframe that to all banks passed a meaningless test that will bear no resemblance to any kind of real world stress that they may face in the next few years.